All right, let's play a little game. Imagine you're building a financial fortress. You've got your blueprints, you know where you want to go, but how much brick do you need to even start laying the foundation? That's the question we're tackling today, specifically when it comes to M1 finance. You've probably heard the buzz: automated investing, custom pies, fractional shares. It sounds slick, right? But before you dive in, before you even think about crafting your perfect portfolio, you need to know, what's the minimum balance? Because let's be real, nobody wants to spend hours setting up an account only to realize they're a few dollars short. That's like getting all dressed up for a party and being turned away at the door. So, we're going to cut through the noise, get straight to the point, and give you the definitive answer. But we're not just going to drop a number and leave you hanging. We're going to break down why that number matters, how it impacts your investing strategy, and what you need to consider before you fund your account. First, let's set the stage a bit. M1 Finance is a platform that's designed to make investing accessible. They're all about empowering you to build a personalized portfolio, a pie as they call it, and then automating the investment process. You tell them what you want, they handle the rest. This approach is incredibly appealing, especially if you're new to investing or if you're looking for a hands-off approach. But, and this is a big but, every brokerage has its own rules, its own requirements. And one of the most fundamental requirements is often the minimum balance. It's the price of entry, the threshold you need to cross to start playing the game. Now, you might be wondering, why do minimum balances even exist? Well, there are a few reasons. For brokers, it's about operational efficiency. They need to ensure that the accounts they manage are profitable. Smaller accounts can be more costly to maintain relative to their potential revenue. Also, minimums can act as a filter, attracting serious investors who are committed to building their financial future. For you, the investor, the minimum balance is a crucial piece of information. It dictates whether you can even use the platform in the first place. It also influences your initial investment strategy. If the minimum is high, you might need to save up for a while before you can get started. If it's low, you can potentially start investing with a smaller amount of capital. So, let's get to the meat of it. What's the minimum balance for M1 Finance? The answer, like many things in finance, has a few layers. For a standard taxable brokerage account, the minimum initial funding requirement is $100. This is the baseline, the entry point. With $100, you can open an M1 Finance account and start building your pie. However, things get a bit more complex when you start considering other account types. For example, if you're interested in opening an M1 Spend checking account, there's no minimum balance required. You can open that account with $0. And if you're looking into an M1 Finance retirement account, like an IRA, the minimum initial funding requirement is $500. This higher minimum reflects the long-term nature of retirement investing and the potential for larger contributions over time. Now, let's unpack these numbers a bit. Why the difference between a taxable account and a retirement account? Well, as we mentioned earlier, retirement accounts are typically intended for long-term growth. Brokers often set higher minimums for these accounts to encourage larger contributions and to ensure that the account has enough capital to grow over time. But what about the $100 minimum for a taxable brokerage account? Is that a lot? Is it a little? It really depends on your financial situation and your investing goals. For some, $100 might be a significant sum. For others, it might be pocket change. The important thing to remember is that the minimum balance is just the starting point. It's the amount you need to deposit to open the account. It's not necessarily the amount you need to invest. Once your account is funded, you can start investing in fractional shares, which means you can buy a portion of a stock or ETF, even if you don't have enough money to buy a whole share. This is a key feature of M1 Finance, and it's what makes it so accessible to investors with smaller budgets. Fractional shares allow you to diversify your portfolio and invest in high-priced stocks without needing to break the bank. Now, let's talk about the implications of the minimum balance on your investing strategy. If you're starting with a small amount of capital, you might be tempted to invest in just a few stocks or ETFs to meet the minimum requirement. However, this could lead to a lack of diversification, which can increase your risk. A better approach is to focus on building a well-diversified pie, even if it means starting with smaller positions in each asset. M1 Finance's platform makes this easy by allowing you to allocate percentages to each asset in your pie. Another important consideration is the timing of your investments. If you're starting with a small amount of capital, you might want to consider dollar-cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the market conditions. This can help you smooth out the volatility of the market and potentially lower your average cost per share. Now, let's talk about some common questions people have about M1 Finance's minimum balances. One question we often hear is, do I need to maintain the minimum balance after I open my account? The answer is generally yes. While M1 Finance doesn't typically close accounts for falling below the minimum, it's important to be aware that your account could be subject to inactivity fees or other restrictions if your balance falls too low. It is always wise to check their current terms and conditions for any updates. Another question we get is, can I use the minimum balance to buy any stock or ETF? The answer is yes, as long as the stock or ETF is available on M1 Finance's platform. However, it's important to remember that some stocks and ETFs have higher minimum purchase requirements than others. Finally, let's talk about some tips for meeting the minimum balance requirement. If you're struggling to save up the required amount, consider setting up automatic transfers from your checking account to your investment account. Even small, regular contributions can add up over time. You can also consider selling some unwanted items or cutting back on unnecessary expenses. Every little bit helps. And remember, the minimum balance is just the beginning. Once you've opened your account, the real work begins. It's about building a solid investment strategy, staying disciplined, and letting your money work for you. So, to recap, the minimum initial funding requirement for an M1 Finance taxable brokerage account is $100. For an M1 Finance retirement account, it's $500. And for an M1 Spend checking account, there's no minimum balance. It's important to understand these requirements before you open an account and to consider how they impact your investing strategy. Remember, the minimum balance is just the starting point. It's about building a solid foundation for your financial future. And with that said, thanks for watching, and until next time.